For the second week in a row, investors are closely monitoring the news about the so-called military operation in Ukraine. Markets especially reacted to the headlines about Russia's attack on Europe's largest nuclear power plant located in Ukraine. Russian troops are approaching Kiev, while Ukrainian forces are still holding control of the city just a few kilometers away from the center. Mariupol, a large port city on the Sea of Azov, was reportedly surrounded by Russian troops. At the same time, the macroeconomic background also shapes the sentiment in the foreign exchange, crypto and commodity markets. Find out more in our video review by InstaForex TV. The US dollar closed another week of growth. The US dollar index, which measures its value against a basket of 6 major currencies, gained 1.32% and consolidated near a two-year high at the level of 98.50. Apart from surging demand for safe haven assets, the greenback also strengthened amid the upbeat data from the US labor market. The jobs report showed a large increase in new jobs in February. This tendency will allow the US Federal Reserve to take a more aggressive stance on the monetary policy and raise the key rate by as much as 50 basis points at its next meeting on March 15-16. In the meantime, investors anticipate the results of the ECB meeting this week. Annual inflation in the Eurozone has accelerated to an unprecedented 5.8%. This puts the European Central Bank in a difficult situation, as it has to raise the rate at the moment when there is a military conflict near Eastern Europe and sanctions against Russia. Notably, the imposed sanctions hurt the European economy as well. Therefore, the regulator is unlikely to tighten its monetary policy now. Against this backdrop, the euro-dollar pair fell to its lowest level of 1.0930, which was last seen in May 2020. The British pound also came under bearish pressure against the US dollar and dropped below the key level of 1.34. Market participants are trying to predict how the situation in Ukraine and its economic implications will influence the decision of the Bank of England. Traders are wondering whether the UK regulator will raise the rate in the near term. Judging by the weakness of the pound versus the dollar pair, the central bank may postpone the rate hike. As for Bitcoin, it was in the focus of attention last week. Many crypto enthusiasts explain Bitcoin's growth by its status as a safe haven asset. However, it's still too early to make such a conclusion. Anyway, the number one cryptocurrency gained 3.5% in the previous week, but depreciated by 11% over the past 4 weeks. A different picture is observed in the commodity markets. Brent crude surged by 15% in the period between February 28 and March 4th. The price rallied to its 10-year high of $118 per barrel. Even the news about Iran going to resume oil supply and increase output could not stop the rally. So far, the US has imposed sanctions on Russian oil refineries, but not on its crude exports. Gold is traditionally gaining ground amid geopolitical tensions. Thus, the quote of the precious metal advanced to the level of $1,970 per troy ounce. The last time gold was trading this high was during the peak of the pandemic in July-August of 2020. You've watched the combined financial review on Insta TV with me, Anna Kasatkina. Stay tuned.